traders, Gary Wagner here just before 11 o'clock in Honolulu. That makes it 4 o'clock in New York on a Friday. Happy Aloha Friday, as we say on the islands. It is the 8th day of November 2013, and this is the daily report for gold and silver, our weekend review. And what a week and what an ending of a week. Coming in with a jobs report that was much better than expected. They were expecting 120,000 new jobs. The actual number was more like 200,000 new jobs. We saw the U.S. dollar gain strength and gold and the precious metals under tremendous pressure. Currently trading off about $20 on the day, $12.8720. It's had a low of $12.8030. The high $13.1470 on the day puts it off about 1.5%. Silver also trading lower, $21.48, breaking through a pretty critical support level, but not nearly the kind of pressure we're seeing in gold, as it's trading off about 0.75% on the day. Low $21.20 and the high $22 on the day. There's a couple of different ways that I do want to look at today's drop. First thing is a short-term 240-minute chart. On this chart, we have basically two fib retracements. One fib retracement takes us on this last rally, which is 1251 up to about 1362. The other fib retracement is after the market's rally from 1181 up to 1430, and we had that drop. That is this. I draw your attention to the fact that we have two different harmonics that are in the market that, to me, seem to be areas that we definitely want to take a look at, although what we saw today was really a fall to really the 76% retracement level, and that's a 76 retracement level of this last rally. So it's given up about 3/4 of the gains that we have seen recently, falling just shy of 1277. I believe we said that 1280 was the low, so about $3 short of that. And you can see a little bit of short covering or offsetting coming into the market. The real question is, as far as I'm concerned, is with the market dipping below 1300, will we see physical buying enter into the market next week? Realize that in India, the premium is about $70 per ounce, and so it really would be a time to consider going into the physical market with the market under pressure. However, my belief is that we could still see a little bit more downside. But the one thing that we want to talk about is really that compression triangle that we have identified and where the market is trading in regards to that. Let's go ahead and pull up that daily chart. As you can see, I put up, it's a 1440, it comes out to 1 day. And we have created basically an upper level resistance, and the upper level resistance that we have created, this trend line here, is simply by looking at these tops. And as I said, it's roughly placed. And we talked about infinitum, these last two attempts in which we had a failure to break above current resistance. Now, in terms of support, we have identified by looking at these most recent lows, and we have really created the angle and attacked using these two lows here. And there's no doubt, we talked about the fact over the last week and a half, that we're probably going to see this market trade down to the bottom of the support line. And we are getting just that. When you look at where our current print is, we talked about the fact that there is this intersection, and the intersection comes from a fib number. I'll have to compress the chart so you can see where that comes in from. This fib number, which I believe is pretty critical, as well as this ascending set of these recent lows right here and right here. Now, what I've done is simply compress the chart so that you can see on this daily chart where this particular number comes from. Now, the low that we had was 1280. 1273 is a major support level that we'll see if it holds or not, because this level here is a 76% retracement from our major move, call it $1,100 up to $1,900 plus, and this would be giving back 76 percent of that, a rather large amount. Now, we have broken below it here. We also broke below it here. So it isn't really sacred ground in terms of not being a place in which the market has been before. We can also see when we look back historically how this was a resistive area here, and we've never really seen it become support, except this last low fell a little bit below it, but without a question of a doubt, it wasn't an exact match, but it's really the only other time. You do have this area here, but recently, these are the only times where we've seen this particular price point come back in place, so we could see how it reacted and compare it to what we saw historically. Now, to give us an idea of where the market could go, where the next levels of support are, I have put up one fib retracement, and this fib retracement is of the large rally that we had, call it 1181, 1435. We put in our various levels. We absolutely broke below 1306. To me, that was a pretty critical area. Next real level is 1276. We've identified that through a couple of different fib retracement time sequences. And then below that, the 76% retracement, call it 1240. So if we cannot hold support at, call it 1275, the next real level of support is 1240 based upon Fibonacci retracement. Now, the last chart that we looked at was a weekly chart, standard candlestick format. This is a daily chart, the same fib retracement, but a daily candlestick, this being Japanese average. You can see that we had a sizable move down. We have really come off of the lows, though, when you look at the Japanese average. And let's go ahead and convert that to a standard candlestick chart, which will give us, of course, a much more true indication of absolute highs and lows. And when we look at it through these eyes, we can look to see come the beginning of the week whether or not this particular level of support holds, call it 1275. We came close to it with a 1280 low. And whether it holds or if the market is destined to really the next real level. My sense is that I have been expecting lower pricing. I've been expecting this for the last couple of weeks. We've really been looking at this as a potential in the marketplace. And my sense is we're probably not done seeing lower pricing in the precious metals markets. And the reason I believe that is our current Elliott wave count, which seems to continue to unfold with our bear. And what I've done is I've put up two charts for us. This is our longer term. It's a 3-day chart. This is our daily chart. And what we're looking at when we look at this chart is as follows. This is this last clip up, or 4. You can see 4 right here in the much more compressed chart. And as we talked about the fact that it was my belief that we saw an A, B, C formation. This concluded 4. 4 concludes right up here. My belief is that we are currently in wave 5. Wave 5, I'm looking at 1, 2, and currently in 3, or an A, B, C. And you can see that right here. We want to see how the market reacts. 1276. This is a pretty critical number. We broke through a major support level when we broke through 1306. And we want to see if the market can hold in this area. Because if it cannot, my sense right now is when we look at this marketplace itself, absolute support is this most recent low at about 1181. Will the market take us there? Well, if we really see this market play out and get this current fifth wave, the way it's unfolding, we could easily see a test. We're already below 1300, but we could see a test below 1200. Now, we have seen silver really come off of the lows, 2120, really the market traded to just about that point, trading at 2147. But the key to me right now is the fact that it broke through this 2155, 2156. This is the 50% retracement, corresponds to the same move when we charted our last major rally in gold. This is the corresponding move in silver, 50%, lows 38%. My sense right now is this market is probably headed to about 2075. That is this particular retracement right in here, 38% of this last or most recent rally. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for another daily update review. Have a great weekend. Bye-bye.